Okay, you are live, it says, and let's play pinball. Quick review of today's action while I got a captive audience. And where's the open? And so we opened, and if you were watching in the morning, you remember that there was huge 64.75 market maker short, customer long positions at 75. And we kind of, hey, Selena, and we went flying right toward them. I forgot the exact setup. I know there were customer shorts at 95 and at, I guess up here, 85, 95, all the way up in here, 6,500. I mean, customer short deal along. We kind of stalled as we were approaching the 85. We didn't even get, see, top of the chop zone, which was also kind of the top of the expected move. As I said in my video, in my morning live thing, as I said in my note, and we didn't get there. And as we started losing 75, then this became a ceiling. Charm sends it down. Market makers hedge in the direction of the move when they're long. So where was it? 75. We went up through it as we were going in that direction, as I said in my notes, and then V down to it, and then basically we're locked under it. In the live trading room, we called out the trade at around 70, 75 when it was failing. One of the folks grabbed the trade to 65. I did something similar. I paper handed it, made a little. He hung on longer, but we overshot the 50 pivot. We went to 45, and I'll show you why we were all confident at 45 in a minute. And then we slowly ground up as people were buying and selling options near the money. That kind of provided us lift on the way up. And now here we are playing pinball. Let's look at over here. So let me blow this up a little bit. Hopefully you guys will see it better. So in the morning, this was here, customer long, market maker short, up at 75. And so that's what pulled us up. There was more short, customer short, market maker long stall stuff up here that we stalled before we got here. In the morning, somebody put in an iron condor, our flow guru, Vula Hula Tulili, clocked the 6,500, 6,505, 6,510 on the top, and 35.30 on the bottom. See 5 wide credit spread, 5 wide credit spread. I and other people that in the trading room sold below the. I sold below the 35 because I'm a chicken shit. Um, and it was a 45 that held. It was also a 45.20, I believe it was, that went in the morning, and that 45 held. That 45 is what you're seeing, is what held us right there. That's what held us right there, almost to the penny. And now here we are in the middle. Breadth is good today. I'm sure most of you noticed that. IWM is outperforming, as we spoke about yesterday, as we've been talking about in notes. I'm using the royal we, even though I'm an I, not a we. Um, etc. And that's what's been going on. So now, with that as a review, tomorrow we have PPI. So I guess that'll be a narrative booster or something. Goldman Sachs had a note where they said go down the value scale. Like basically go to companies that are more speculative now that the rates narrative is in there. Okay, so let's anybody have any I threw some links and stuff in there. Okay, so let's go back to the where we are now. So what's in place? So we're at around 60, give or take. So one fly type pin is right here, 60, 55, 50. Or if we can get above here, hard to tell. One would assume that the 65 would decay out, or the 70 for sure. I don't know if any lottos are going to come in. Let's look at a different view. Charm seems to indicate that we're going to come in right below the 60 that we saw there, or we could sneak above it, and we'll see. See, we come in right below here and here, or if we get above 60, then these longs go ITM in the money, and that can help send us up further. So we have a few places. It's not a slam dunk. Yesterday we spoke about Iron Condor Whale coming in. Nope, Iron Condor did not come in. Nope, Iron Condor Whale did not come in. However, based on my, what could say, secret source, which is not so secret, which is very similar to his, I didn't pass. I did it. And I did it. I think I did it here on YouTube. And I closed it at 50% profit like I always do, and it was fine. So yes, he did not come in. Okay, so how I gauge whether he'd be in or not, simple version, oversimplified maybe, is if we have a quote unquote outside day, not based on candles, but if we exceed the expected move, that's when he comes in, or that's when, it doesn't matter him. When we exceed the expected move, we tend to have a day that goes within the expected move, an inside day. And so the trade is after exceeding the expected move, sell the expected move, Iron Condor, which is about a 20-ish delta. I like to go to a 16 delta and sell it and buy it back at 50%. And that's what I did. And that's sort of one of my trades, that I regularly do, that I give to my subscribers. If they want to follow it, that's up to them. So on a day like today, we have the opposite. One might almost, except I don't like to buy options because I'm a cheapskate. Whoops. One might almost say on a narrow range day like today, one might consider buying the expected move for tomorrow. Something like this, which I'm not going to do because I'm a cheapskate, like I said. something like this. Buck 45. Oh wait, all right, it's because I missed the other one. Something like that, or even something like this. Usually you pay about $3 for these. Buying the expected move, the 34 delta, that's about right. Buying the expected move would be a statistically good idea. And if you're a cheapskate like me, you could then sell something up there. I might do this. Yeah, something like that. Yeah. Yep, that's the basic idea. That's the basic idea. And then when I do it, and I did this yesterday, I'll not going to just blindly sell the delta. And guys listening on YouTube or whatever, I mean, I don't mind telling you what I do, or you can subscribe to me and see it in person. I also look at what's going on in the chain, and for tomorrow, we don't really have a lot in here. I'm sorry, I'm new to your feed. But, no, I'm happy to respond to questions. Oh, you're welcome. Yeah, I am happy to respond to questions. I like to talk anyway, and I like to teach. Okay, so I mean, we have calls up here, but that's not what we're looking at. We're trying to see if there's anything in here. Now we see this, a lot of sold, a lot of market maker longs down here at 64.20, and again at 63.90. That gets my little 64.20. Well, that's pretty. That's a 17. So you know what? I guess for fun, I'm going to do this. And I can always manage it tomorrow or whatever. Okay, I got filled. In theory, that should work. Just a one lot, just for fun. And that 95 looks awfully juicy. 50 cents. I'll sell two of these. That's $100. That partially pays for it. And up on top, what's going on up at top? So I might sell something more aggressive. Here's tomorrow. Look at this shit. Pardon me. Sold puts all the way down here. You can go. I'm willing to go closer. It would take a miracle to break that. I'm willing to go here. Come on. I can always add. Let's go like that. And up on top, follow volatility, my boy. Not my boy, and my man, my boy. How wide did I sell it down here? 15 wide. What's the 15 wide on top give me? 50 cents. I'm just going to do one of those. I'm not crazy about selling the top. But it's above the 65, below the 6,500, so I'm not totally against it either. And I can always adjust later. Okay. Now let's go back to the story at hand. What brings all you folks in here? There you go. Okay. And that's pinball. Let's get back to here. And for pinball, this helps to see where the bodies are buried. 55, 50. but I like seeing the shape of the distribution. Let's go here. We're at 58. Okay. So over under 60 is a big question. While we wait for this to load, discuss amongst yourselves. Good evening. Okay. It's easier when we're between two shorts, two market maker long customer shorts. So what's going on here at 60? See, when you see these tails, I don't know if you guys can see these tails. That's basically where the trading is. And again, not surprising, near the money. And so we have all these longs up here to pull us up, customer long, market maker short. Except we have this stalling us right here at 60. We have this pulling us down to 55. Right now, the 50 looks solid, and the 50 all day long, or not all day long, but once we were going down, was again, sometimes market makers were short the 50, sometimes long, as customers traded in and out of this. So 62.5. So that's over under 60 is the question. And my man here is saying over 60. In which case, it'll be a long call fly. It'll be this thing right here. Or over 60, are we going over here? What do you like better? Do you like a 60, 65, 70? Or do you like a 55, 60, 65? Here we just have to be over 55. Oh, crap. See that? It already went. This one's cheap enough. Let's try one of these. All right, so this needs over 60 to win. Anyone else for pinball? We got one stepping up. Let me see in the trading room. Doc, your mic is breaking up a bit. Yeah. Oh, well, that's because I'm on the Boomer. I'm on YouTube and Twitter doing pinball. I'm keeping the mic open here so you guys can hear. But why don't you join me on YouTube? So yeah, so Boomer, what you were hearing is me. I'm over facing the other computer doing pinball on YouTube. This was a better play at the time that we looked at it, because here we just need over 55 and under 65, which is probably a higher percentage setup. This needs 180 plus 55, call it $2. This needs 57 to be a winner, and it doesn't start being a loser until we get to about 64. So that's actually a decent trade. Either one of them are okay. Obviously, depends if we're over under 60 is the real question. And right now we're at 60. So this has the potential to be a winner. We're going back and forth over the 60, 65-ish. With the ish, you have to be, with the pinball, you have to be over under the number. Over 65 or under 65. Because what we're trying to figure out is where charm is. We're trying to figure out where the decay comes from. And so the idea is that we would get through this. 67, oh boy. We have an optimist in the house. Yes, it is thin. I agree. Charm is thin today. Except for up here, but it's far enough away it doesn't matter, and this is hedged out. It's thin, but let's throw in a but. Now let's go to gamma for a second, which is kind of like charm's cousin in a way. This is all market makers short gamma. And so this is market maker long delta. So this has the potential to go ITM and pull us up, or once we stall over here, if we stall over here, then this sends us back down. So over 60, so it's thin, but it's not thin, if you know what I mean. It's thin at the one strike, but the cluster up here is not so thin. And look at that. We may be breaking through. No, this is where the battle zone is. Yes, negative gamma dominated. Yeah. Yep. Right. Negative gamma dominated. Right. That might be a different way to say it than thin. And so it's going to be over under what's right here. This will either charm us down if this collapses to a zero, or sends us up. And it looks like it's sending us up. Now I had to fly with the 70 long that I closed before. Okay, so here's what has the decay. The 65 that's above us either pulls us to it or through it, or this whole mess. Where is it? You're talking your book, huh? He's talking his book. Mentor Q core resistance has been moving down since the open, if I read it right. Yeah, well, you have to, and I talked to Fabio about this way back when. He always calls the calls overhead resistance and the puts support, but that's not necessarily true. A long call overhead is not the same as a short call overhead. Customer long, customer short. I told him he should change what he calls it, and he was basically, it's too late. So the reaction zone came down. Now let's take a look at it. We can take a look at it. His numbers, his levels, his numbers are right, are good, but I don't like what he calls them. Let me put it like that. Holy moly, look at that. I shouldn't have sold that that butterfly I had before. Paper hands is my motto. So let me find it. Mentor Q, I got it here somewhere. Intraday. Update this script. So he said, I mean, his lines end up at the right place. I have no problem with that. That's what he calls it. That's why I like keeping it with numbers and with the abbreviations. That way it doesn't kind of bias. It's just lines. And 4 is stronger than 5, so the up is. So here's his stuff and my stuff superimposed. And you see confluence here, confluence here. So let's see what's causing this. That way we have a much better way to predict direction. Oh, look at that, 65s. Look at how many buyers jumped in and bought those 65 calls. They bought them cheap. They bought cheap lotto tickets, ladies and gentlemen. Now, they might jump out of those lotto tickets too. And I think we have a winner, Mr. Wong. Good. I'm using them too. So now the question is, in my mind, okay, try to put myself in whoever's shoes. And if we look, let's kind of think on our feet here for a second. Come on. We don't have a lot of time for this. Let's go. Okay. If we look here at 65, we see that most of this happened relatively recently, these buyers of these calls. Here's the customer side of the table. So like here for the 60s, you see the tails? They bought these 60s and they sold them, and here's where they are now. The 65s, this many have come in since the prior update, about 1,000, a little less. So if you bought 65 calls, say 10, 15 minutes ago, and you were in the money, would you hold them, would you sell them, or would you keep them? I would sell them because I have paper hands. But some people might keep them, some people might sell them, and even more so the 70s. And so that's the other side of the thinking we have to do. I mean, it looks like it's holding, and it looks like one that's going to come down to the wire. Now let's get back to charm. Okay, so here the values are small. So whoever said that it's thin is actually correct. So if we look at what the values are here, value 5, that's nothing. That's 5 contracts. So yes, you're absolutely right. The values are small, charm is thin, but gamma isn't. Think of it that way. Market makers still have to buy because of the gamma. All right, maybe we're going to 70. All right. Should have held on to those calls that I had. So basically, we did that. We stayed within my chop zone the whole day, which was basically whoever asked me about my iron condor before, Samson, I think it was. That was what was supposed to happen, predicted to happen. It looks like it's going to be over 65. Okay, so 240. Do I take the money? What do I do with this? So here's the one that I bought. Oh, look at that. Look at that. I'm going to put it in for $4. I'll put it in for 375, 395, whatever it is. It's hard to get out of these things. Okay, pencils down. Okay, they're going to give me the money. Okay, so we had a winner here. You can't tell exactly. Well, you can tell exactly what it's going to pay. The 60 is going to be worth $6.64. We'll call it 665. $665 minus these are going to be $1.64 minus 164 minus 164, but we received a credit for them of, or we can look at it this way, we paid, I have to look at my position. Where is it? We received a credit of 62 cents for them. So if we're doing the math this way, we have to add in, so we received a credit of 62 cents. So basically we lost $2 on these. Yes, that's about right. About 350-ish, 335-ish on a 105 investment. $200 or double your money. Thanks for playing. Good job. Good job. So you said you were holding the 60s. Were they naked options? Were they spreads? Was it a fly? What was it? Naked. So you must have bought it relatively soon. Otherwise, you would have paid a lot of. You would have lost a lot of theta. Yes, cash sell, I understand, but if you bought that early in the day, you'd be paying theta for it. You'll be paying volatility for it. Let me put it that way. Later in the day, the cheaper options are because there's less volatility in it. Volatility is the standard deviation of the expected move. Vega, standard deviation of the expected move divided by time. As time decreases, the volatility or the expected move decreases, and so the price of the option decreases. So, how much time did you pay? Obviously, you're happy, so it doesn't really matter. I'm just curious as a options geek, for 2 hours ago. And 2 hours ago, we were, let's see, 2 hours ago, so basically when we were pretty close to the low of the day, around fit when we were around 50, I'm gonna guess when we were somewhere in this zone around 50. And by the way, you're not the only one that was buying 60s, because early in the day, or at some point earlier in the day, when we were down in this area around this time, like around 10:30, 11, a small whale, a barracuda, let's say, came in and bought 60, 75 call debit spreads, about 1,000 of them, if my memory serves me well, or something like that. And that we kept getting pulled up to those 60s, and at some point he closed them out for a decent profit. Yes, pivots. That's 100% correct. Okay. Well, another nice day's work. PPI tomorrow. Oh, PPI tomorrow and QYLD roll. When it's deep in the money, the roll doesn't have as much. Um, whoops. It doesn't have as much of a of an effect. And as a reminder, well, these things are so deep in the money, it's not funny. We don't need volume. We need open interest. Something's not right here. Oh, it's trying to populate. Hello, there they are. They're down here somewhere. Where are they? There they are. So what I do during the day, I do this. It's more important when they're selling than when they're buying. But if you view options chart, I turn it to 5 minutes today, or even 1 minute today. I mean, nothing traded, so you're not going to see anything there. Let's do on some. Let's do this on SPX so you can see the trading just for fun again. Okay, let's get safe. Let's get safe for tomorrow, 6,500. Okay, so here you see the trading. We don't really know if these are buyers or sellers. This is the price of the option. It's just when the candle opened, when the candle closed. So you could see this is by the minute, the size of the trade, 700 contracts, whatever it is. But what I want to show you, this is VWAP. So on Friday, they will be looking to sell the calls at VWAP or higher. Tomorrow, they'll be looking to buy them back at VWAP, but there's not going to really be much fluctuation because they're deep in the money. But I guess how deep in the money they are is what's going to matter somewhat. So when you see me posting these on Twitter or wherever on social media that you happen to stumble across me, that's what's going on. You'll see the chart. You know, a lot of times I post these charts on Twitter or wherever. On Discord, excuse me. Yep, Diamond was relative strength, and so was RSP, so was IWM. Q was the laggard, and if we take a look at this, and in my morning note, whoops, share screen. Let's go to the screen here real quick. Is this the one I want to see? I think so. Yeah. If we look over here, the advanced decline line opened more near 1,000 and it stayed there the whole day. Stayed there the whole day. Well, I don't have my alarms on this one. You have alarms on that. Here's the ticks of stay. But let's go. And here's the advanced decline line of the S&P 500. There's also an IWM advanced decline line. I forget what it's called. I'm pretty sure there is. I think I played with it before. I'm an IWM long in short puts. That had the most short interest in it. I had the most, and I posted it a few different times in weekend articles more. Had the most put gamma beneath it that's potential rocket fuel if we get moving. I actually closed out some of my IWMs today, and I still have like two call debit spreads for the end of the month. Okay, everybody, goat time. Time to feed the goats. For my subscribers, I'll be doing a a screen share, assuming my computer's working because they're coming from Spectrum to make sure my modem is right. I think it will be, but you never know. Okay, take care, everybody.